What will you be following most closely during today's session?
So I think right now, in that we've gotten a little bit of data that we're going to have from the Philadelphia Fed and the New York Fed, I will certainly be continuing to follow what Fed speakers have to say. If that's what the market is paying attention to right now, because we're also focused on tomorrow being the first day of blackout for the upcoming FOMC meeting, and what the Fed is actually going to do on October the 29th. It sure is sounding like we've got another rate cut coming up for us.
All right. We're in earnings season again. Bank earnings have been received mostly positively by investors this week, but we understand you believe that some anxieties are lurking. Why is that?
Well, it's interesting that you mentioned that, because JP Morgan Chase, which we consider to be kind of the flagship, the flag bearer of all big U.S. banks, even though they saw a slight decrease in their credit card delinquency rate, they set aside more money. Loan loss provisions rose by $810 million, tied primarily to what they anticipate to be further losses in their credit card loan book. That tells us that the consumer is not necessarily getting better outside of the top 10% who benefit the most from where you're sitting, from the stock market gains that we've seen that have risen stocks to all-time highs.
All right, and another story traders are tracking is the latest developments on trade, particularly between the U.S. and China. What impact, Danielle, is this having on businesses?
Well, what you're seeing is quite a bit of uncertainty continue to paralyze U.S. corporations. And as long as that is the case, they're going to be very reluctant to increase their headcount, to increase business spending. Business investment is what has taken the U.S. economy in and out of recessions since 1970, and that is going to be crucial in terms of removing that uncertainty factor weighed on by trade for businesses to begin to grow and expand. That's what the U.S. economy needs right now, is for the private sector to re-engage.
All right, and you've mentioned uncertainty. How much additional uncertainty is the government shutdown creating, both for businesses and for individual investors?
So, it just adds yet another layer to what is already really crippling companies, and we should bear that in mind. We're fast approaching one of the longest shutdowns in U.S. history, and as long as this continues, businesses are going to be concerned that economic growth is going to slow, that the money taken out of federal workers' pockets is not going to be around in order to make purchases. And U.S., whether we want it to be the case or not, U.S. GDP is still 70% consumption. So what we spend is what the U.S. economy is.
All right, and we have about 45 seconds left. Earlier this week, Fed Chair Jerome Powell said the tightening program could end soon. What does this mean when it comes to the Fed's rate cut timeline?
So when Chair Powell was mentioning the tightening, he was talking about shrinking the Fed's balance sheet. And so what we're looking at right now is the Fed beginning to be concerned about liquidity in the market. In 2019, we had an episode of quote unquote not QE. The Fed doesn't want to return there. So even though rate cuts are anticipated to continue, we are looking for the Fed to stop shrinking its balance sheet in order to ensure that there's ample liquidity in the financial system.
All right, thank you, Danielle DiMartino Booth, CEO and Chief Strategist at QI Research.
Thank you.